Thangamayil Jewellery, that's the stock on our radar. SM Lakshmanan, who's the Vice President Finance and Accounts, joins in to discuss their fourth quarter numbers, which were obviously, bolstered by the big rise that we saw in gold prices. The question is where we go from here on itself, because the company believes that if this rise continues to sustain, then maybe at some point it may have an adverse impact on volume offtake for gold. Thanks a lot, Mr. Lakshmanan, for joining in. I was looking at your update post-quarter as well. Akshaya Tritiya, not much in terms of value growth happened over the last year. In fact, volumes declined by about 24% as well. So in light of all of this and the kind of growth that you've seen in this year, close to around 28%, what is the aspiration that you have for FY26 when it comes to revenues? And what kind of margin prognosis do you go with?
Good afternoon, Mangalam. Thank you for the opportunity. Thangamayil Jewellery Limited has achieved a turnover of 4,911 crore rupees for the financial year 24-25, registering a retail revenue growth of 28% year on year. In terms of volume, gold increases by 4% for the financial year 24-25, and the diamond volume increases by 12%. As far as the current financial year 25-26 is concerned, yes, it has started on an encouraging note. Akshaya Tritiya 2025 revenue performance has been better than the 2024 Akshaya Tritiya performance. Chennai flagship showroom, which was launched in the last week of February, initial response is satisfactory. And the company is hopeful of bettering the retail revenue performance of 24-25 in the financial year 25-26.
So upwards of 25% is what we can see this year.
Absolutely.
Okay. So just wanted to get a sense in terms of the diamond volumes. For Q4, it was up around 7% odd. Are your diamond volumes being impacted, one, because of lab-grown diamonds, along with the fact that there are higher gold prices?
Lab-grown diamond is not a concept in this part of the country. Rather, more particularly for Thangamayil Jewellery, whatever we have been selling is natural diamonds. And yes, the diamond sale has been having a very good youth appeal. And it has been doing wonders in my company, Thangamayil Jewellery.
All right. What about store expansion? What are you targeting in FY26? You've, opened a couple of stores in Chennai. You have a few more likely to open. You've raised over 500 crores via fundraise as well. All of this to be deployed in store expansion. What is your target here? What geographies are you looking at in and around Tamil Nadu, looking to get out of there as well? What's your prognosis?
Yes, Mangalam. The year started with a store count of 60. The 60th showroom had been the Chennai flagship showroom. As you correctly said, 2 showrooms have been opened during this 1.5 month period. So the present store count is 62. And 8 more showrooms the company is looking at to launch during this financial year 25-26, taking the new showrooms tally to 10. And predominantly it's going to be in and around Chennai, and probably 3 could be in other than Chennai in the state of Tamil Nadu. As of yes, the company is looking at Tamil Nadu state, and a lot more can be done in the state of Tamil Nadu itself.
Okay. While business has grown for you, your margins are still subdued. In fact, they've fallen on a year-on-year basis from, say, 4.9 to 4.1%. What resulted in the additional incremental pressure, and what is your guidance?
Yes, EBITDA margin for the financial year 24-25 stands at 4.76% on the retail sale. There are a few reasons. One is the customs duty reduction hit. Normalizing this customs duty reduction hit, my EBITDA margin would have been 5.08% for the financial year 24-25, meaning upwards of 5%. Yes, the company has consciously incurred brand building, advertisement, publicity promotion expenses in the financial year 24-25 for the expansion that has been going on in and around Chennai, as well as in a few other towns and cities in the state of Tamil Nadu, which will have the enduring revenue benefits in the periods to come. But for this one-time expense which has been incurred in a front-ended manner, and to some extent the staffing expenses also for these expansion outlets, the company is confident or hopeful of retaining or maintaining the EBITDA target at 6% level going forward.
So what margins should one work with next year? Are we looking at closer to double digits?
Gross margin?
EBITDA margins.
EBITDA margin, I'm saying 6%.
Okay, 6%. And you said that if gold prices are high, that may impact volume offtake. So what is your experience been so far with gold at little over 1 lakh rupees per 10 grams? How has customer behavior been? And what are you doing to prop up volumes going forward?
Sales continues to be encouraging for Thangamayil Jewellery. That is the reason I said the company's gold volume growth has been 4% for the financial year 24-25, and in the last quarter it has even been 5+%. So we are confident that it will be able to maintain this positive gold volume growth in the year 25-26 as well.
Okay. What I wanted to know is, have you had to reduce your making charges when you do sell jewelry to your customers? Have you had to do that, especially in the past couple of months?
There could be a little bit plus and minus in terms of making charges or in terms of, at the gross level, but the company tries to target the gross level to be at a double-digit level, 10% level. Presently, it is 9+%. Definitely, the company is looking at a target or guidance level of gross profit to double-digit level, 10%.
Okay, but just specifically on the making charges, I wanted to understand that are the discounts heavier than what you were probably giving 1 year ago?
Yeah, it is cyclical based or season based. For example, in the Q4, yes, Thanksgiving discounts would have been given. It depends on the seasonal factor. But at the end of the day, the company tries to have the combined gross profit level at 9+%, taking it to 10 double-digit level going forward. To answer your question, is the season-based, strategies the company will be taking.
What about hedging? It's increased from 70% back in FY21-22 to close to 96% now. How does what kind of bearing does that have on your margin? Because at a time when gold prices are rising, you would have been better off unhedged because you would have gotten a lot of money on the inventory that you would be sitting on. Now that gold prices are at the peak, are you looking at increasing your hedges further, or are you looking at reducing some of the hedges?
Yes, Mangalam, as I had mentioned in the last CNBC discussion as well, the company maintains the hedging policy of 90+%, almost fully hedged. The reason is company wants to focus on the operating efficiencies, operating profitabilities. So now that it is fully hedged, yes, the company is looking at the operating profitabilities.
Okay, operating profitability is what you're looking at, over 25% revenue growth in the retail business next year with positive gold volume growth and margins, EBITDA margins of 6%, targeting gross margins of double digits as well, with 10 stores to be opened in this year, 2 of which have already been opened. Thank you so much for joining in, sir, and giving us an outlook for the next year. That's the management of Thangamayil Jewellery. Street likes what they're saying specifically on the margin and gold volume and the guidance for next year. Stock at the high point of trade. Take a short break, come back, getting more on the markets and a lot of stock-specific action. Stay with us.